Trick or treat. Man. I'm excited to be here tonight. I know you guys are not used to seeing me on Tuesdays, but you guys are used to seeing me on Mondays. So you guys saw me last night. And I'm here tonight. So that's the trick or treat for today. Man, I am here on a Tuesday. So the club's going up on a Tuesday, right? And I'm excited to be here. Obviously, it's Halloween. So, chose a topic for tonight. Should we be fearful or should we be greedy at the end of 2023? So, it's just me tonight. Shout out to Mark and Jolene for always holding Tuesdays down. And our good brother, Mark Monroe, allowed me to come on Tuesday night. I said, man, let me go back to back, man. So, we got the club going up on a Tuesday and back to back. Those are two Drake songs right there for those of you guys that know. I'm excited for tonight. I know we've gotten a lot of questions from people like, yo, should we be fearful or greedy at the end of 2023? That's been probably one of the number one questions that I've been asked the past few weeks. So let's get these shares up. I'm excited. Let's go. We're going to get the disclaimer, this intro, and then we'll be right back. Let's get it. Man, so we are here tonight, man. What's going on? Let's get some fires in the chat. Y'all fire this thing up. We're going to get this thing kick started. So, the topic of tonight, should we be fearful or greedy at the end of 2023? Like I said before, that's been a topic I've been asked a bunch lately. A lot of people have asked me, should we be fearful? And I've sat back to myself and I said, man, should we actually be fearful or should we be greedy? And one of the things that I want to preface before I even speak about and go in depth to my answer to the question, I think that, a lot of times people look at certain stock prices declining, and it's very easy for our emotions to take over. And when we start looking and we start saying, man, this stock price is decline, and we're not looking as much at the business as we are as we're looking at the stock price, right? So I think that one of the things that I do want to say before I even answer this, right, as far as my opinion, is I want people to understand the stock and the business are two separate things. Sometimes you can have a company stock price that is going up, but the business may necessarily not be doing the best. There could be maybe some additive reasons as to why that may be happening. Maybe at that point in time, maybe the business is not doing the best, right? But there's some adequate maybe reasoning behind it as to why it's going up. Maybe there's some belief that the business will turn things around, or maybe the stock price is recovering, maybe off some recent lows that it may have made after a huge decline. And you also have to understand that just because the stock price is going down doesn't necessarily mean that the business is declining. It could be the overall macro environment of the stock market, right? So, at the stock market as a whole could be declining, right? So you do want to keep, like I said, you do want to keep that in mind when you're thinking about, the differences really between investing and trading, right? So an investor, um, is someone that's going to look and evaluate companies and look to buy and hold companies for an extended period of time. You're going to have a trader, right? Someone could be a short-term trader, right? And be looking more so on the regular day-to-day type trading. You could be a shorter term interim, a swing trader where you're thinking about the next few days or the next couple weeks. And then you could be a midterm trader when you're thinking about the next right? You could be thinking about the next 3, 6 months, right? Or you could be someone that's thinking a little bit maybe more longer term type trader, thinking about a year or 2 years out. thinking about the leap option side of things. So you definitely want to understand what your goal is before you're even thinking about okay each side, right? You definitely always want to think about what your short-term goals are and what your longer term goals are. So the question of the hour is, should we be fearful or should we be greedy at the end of 2023? And I think let's go ahead and get into the answer. I personally believe that people should be greedy. And the reason why I believe people should be greedy is as simple as this. I want to really make it make sense for you guys. There's only necessarily been a handful of stocks that have really recovered and went to their all-time highs. So there's still a lot of stocks, particularly that are trading sideways, right? There has been some, some huge winners this year, like an Nvidia, right? That has made, one of the stellar comebacks of the lifetime. You've seen names like Meta Platforms make a huge comeback, right, from where they were at. You've seen Microsoft. Microsoft has done pretty well, coming down. I mean, coming all the way back from where it was. I mean, this was a stock you're talking about, Microsoft, that was at the lower 200s. It was able to rally all the way back above 300. Has been able to stay pretty strong. So I think when it comes to, why I believe people should be greedy is because I think a lot of times we discount the years that come after, right? The boom that we may have, and then that drop. And then there's some consolidation periods. Like I'm looking at a lot of these certain tickers, and certain tickers have kind of been in the same spot since late 2021 and early 2022, right? And even mid 2022, where they kind of started, to kind of find a bottom. And I think that, there's been a lot of overreaction, I think, I think there's so many different platforms that are coming out pushing like different narratives because they want people to be fearful. And I think like I would say the next 2 years are so pivotal and so key, especially from an investor standpoint, because you actually want to be able to build your position brick by brick. So I think that it's super important that people are are building their position in the names, particularly that they like right now. So the reason why I say people should be greedy is because yes, this market, right? We have a date with the Federal Reserve tomorrow, and then we have a date with them in December. And we're also going to get Apple's earnings, and we're going to get more earnings reports that come out. And there very well could be, a move to the downside, right? We came to 409 on Friday on the SPY, and then the SPY as of today went all the way to about 417 and change. And we're seeing like, we're seeing like the SPY has been able to, kind of rally up a little bit. I don't quite believe there's as much panic in the market as what's been made to believe. I think a lot of what we've seen the past 3 weeks is a lot of profit taking from investments that have now been held for now a year and a day. So I think a lot of the profit taking that has came and happened. And you always have to expect that there's going to be a little bit of stagnation after, the market goes on a 7, 8 month run, right? We ran for about like from the bottom of we ran from pretty much December all the way to end of July, right? And so you think about that, relatively with few, red weeks, red days were happened, but we're definitely far and few between. And this market was able to catapult itself higher. And then over since, like we said, the end of July, so pretty much August, September, and October, you have months where there's some stagnation and then some certain stocks dropped and peeled to the downside. So if you think about it, I mean, Tesla was at, approaching 300 and got rejected again, right? Just a good example. And now the stock, for Tesla is right here again at $200. So you're talking about you've gotten like a 30% type discount. And there's been other stocks that have retraced. Even think about AMD. AMD, ended up, when you take a look at one of my favorite companies, like I said, AM Dizzle, AMD came from a high, at the top of this year. AMD had a high all the way up here at $98, right? AMD obviously not 98. It's currently at nine. It currently had a high today of $98. It had a high this year of about $132 and some change. So looking at that, I mean, I'm looking at it saying, man, I mean, a name like AMD has dropped as well too. And I think some of these names can drop lower, right? We've seen names like Goldman Sachs. We've seen names like JP Morgan. These names have, really pulled back. What I've seen though is like when it comes to, uh, you know, when you're taking a look, like I said, at, these particular tickers, I'm looking at, a Microsoft. I'm looking at, even a ticker like an AVGO. This thing, I mean, it's flown sky high. And there's certain names, like I said, that have been able to bounce back, rally pretty strong. And some of these names have pulled back from their recent highs. So when I'm looking at, when I take a look at the VIX, the VIX, what I really like is the fact that the VIX has not been able to stay over 20, right? It's every time it's trying to kind of got to 20, 23, it's been getting rejected. So that's showing me that there's not quite enough fear. So I think it's you know, you really want to make sure that in my opinion, I think it's still greedy season. We want to get as much as possible because we're not just thinking about, okay, where are things at today. We're thinking about something like, let's think about when certain times where we start to get some certain things like really cleaned up here, right? We all know the Federal Reserve has raised interest rates, just as they said they would do, with the goal in mind to try to, you know, you know, kill some of the spending, whether they're going to admit it or not. That was the goal, to kind of decrease, because the economy was on fire and there was so much spending going on. It was all artificially created. And so when you think about this, we'll take a step back and let's go into this, right? Anytime you have interest rates at zero, right? And I want people to write this stuff down tonight. I want everyone in here taking notes, and I want you guys to do something for me real quick. We got 160 people on. I want us to get over 200 tonight. Let's fire this thing up. You guys got me back to back. So we tore the house up yesterday. Back tonight. Once again, shout out to Mark and Queen Jolene for letting me grace the stage tonight. So I want you guys to share this with 5 to 10 people right now. I want you to put it in your family group chats. I want you to send the text messages out. I want to light this thing up, right? I want you to light this thing up, and I want you to share this thing out. What I'll say is that anytime you have interest rates at zero for such an extended period of time, and you continue to print money, you're creating now a bunch of artificial, right? Where now things are propped up. And you had some companies that were basing their next 5 years off of things that they did in 2020 and 2021. And so now these companies, certain companies' expectations were all misconstrued, where they were thinking they were going to be making X amount of dollars. And then they realized, yo, our numbers are completely off. And they started to get kind of a little bit complacent and thought that, yo, this is going to be how business goes forward. And then, quote unquote, the free money stopped coming. And what I'll tell people is like I said, when that, quote unquote, when that free money stopped coming, it really took a huge damper, for, not just, people, but also these companies, right? Because, you could go to most malls, right? You can go to like these different malls. Like, for example, we use Lenox Mall here in Atlanta. During the pandemic, like Lenox Mall was packed every day, every working day. Didn't matter if it was a working day, a weekend day, it was packed. You go back now on some of these weekdays and you see, not really too many people in there. So the environment has changed. A lot of people have went back to work. And there's nothing wrong with that at all, but it's just a reality. Where in 2020, some people were being paid more money to actually not work than actually go to work. So you got to think about that, right? And now these companies, once again, they were making their expectation off of artificial numbers. And so some of the things, particularly as I said here, you want to be, in my opinion, you want to be as greedy as possible, because there's a lot of companies, right, that you're thinking maybe from a futuristic standpoint, whether it's cybersecurity, cloud companies. There's a lot of different sectors of the market that honestly are either still declining, right? Or have not actually been able to even go anywhere near their all-time highs yet. They may have increased and came back, maybe from some lows, but there's still some companies that are now providing you great entries on on a discount. So you think about it, like just to even mention, I mean, I'm just looking at certain names, and I've seen a name like Caterpillar today got creamed. Caterpillar got creamed. Caterpillar was down about 6.5% here today. It's currently at 224.70 in the after hour session. Right. So Caterpillar got creamed. The Dow was still able to pretty decently stay upright. So that was solid. But Caterpillar, there was definitely some equity outflows. You think about Cat, you're now talking about a ticker that, at one point this year was, had a 52-week high of 294. It's now, at 224. So once again, we go back to even some of the growth names. We take a look over the past, with a name like Shopify, right? Shopify was at 70, a high of 71, currently now is at 47. We take a look at something like at the ARKK ETF, which was actually up 2% today. It's currently at 35. But the ARK Innovation ETF, there's opportunity, in my opinion, for the ARK ETF to come down to maybe 27, 28, or $29. So there's still, still some great buying opportunities, like I said, here in the market. One of the most notable things that we spoke on last year was the TQQQ and how the power of using the TQQQ, which is a 3 times levered ETF of the NASDAQ, and how you could leverage that and make money from it. Last year, the TQQQ hit a low of about $16. And a lot of people were buying it at 16, 17, 18, 19, 21, 22, 23. And then the TQQQ ended up going all the way to a high of almost $48 this year. The TQQQ now, when you pull it up on your charts, the TQQQ now is at 32.78. So let's say this QQQ comes down some more. It's right here at 350 right now. We know we had a Federal Reserve tomorrow, so we'll see how they shake or make the market. And then we also have Apple's earnings, which is going to come. It's going to be ideally for, once again, for people to be really watching and paying attention to, like, yo, like I said, what happens next? Because any type of, pull to the downside, any movement on the QQQ, any movement on the SPY, to the downside, and us, like for example, the SPY breaking below 409, the QQQ breaking below 339. Those are going to be levels that are going to be pivotal going forward into the last part of this year. Make or break type areas and levels on the QQQ and on the SPY. But I think when you think, once again, from a 5, 10, 15-year horizon, like, you're looking at some of the greatest opportunities to get into some of the greatest companies over an extended period of time. I think one of the misconceptions that a lot of times we have as investors is we sometimes get caught up in thinking that we have to do everything day one, or we have to do everything right now. But it's consistency that truly pays off. So when you think about it, when you go into the gym, right? When you go into the gym and you continue to do to do reps over and over again of the same weight, what happens over a period of time? It becomes easier. For more of a challenge, you're going to need to increase that weight, right? So going to need to increase the weight that you're lifting, right? And even if you're doing now you're doing those same reps, those same number of reps that you were doing before, it's more strain on your body now because it's heavier. So your body has to adjust to that weight difference. So that's the same thing I feel like when it comes to long-term investing is you do have to be committed to showing up. One of the hardest parts, I think, is just the showing up part, right? When it comes to anything, right? And the ability to understand, like, yo, not every year is gonna be a blowout year. And honestly, once again, we think about these investments, and everyone wants to be in a stock that's going up like an Nvidia this year. But last year, if we would have had this conversation at this same time, last year, October 31st, and I would have said, yo, Nvidia was gonna be making a new all-time high and almost pushing towards, and actually did briefly break above $500 a share, probably most people probably say you're crazy. Now, no one's a fortune teller. No one, I honestly, I don't know anybody that said Nvidia was going to be at, over $400 this year, going to be at $500. So the point that I'm making is that sometimes when you're thinking about investing, I mean, like you're not going to know, okay, this year is going to be the year. And so the point that I'm making is that's the point of you wanting to be invested. One of the things that I hear a lot of times is people say, "Well, I'm just waiting. I'm gonna keep waiting. I'm gonna keep waiting." And it's cool if you have an ideal price that you want to get into, right, for your particular stock that you're looking at. Um, but don't just be waiting because you're waiting for the worst of the worst to happen, and then let's say the worst of the worst never happens. Like a lot of people sometimes come up with scenarios. Yo, I'm gonna do this if this happens. I'm gonna, coming up with these different, scenarios, and then just like I said, it just doesn't add up. It doesn't make sense. And then the time comes and the execution is really lacking. So that's something that I would say. I feel like you should be greedy towards the end of 2023. Like Black Friday isn't gonna, in my opinion, Black Friday sales, and I see we just cracked 200. Let's keep this party going. Black Friday, right? Like I'm focused on the Black Friday. I want a Black Friday on the stock market. So I'm not going to be fearful of any stocks coming down, especially stocks with business models that are projected to grow over the next 3, 5, 10 years. Last year you heard comments like this, right? You heard comments like Meta's dead, right? It's not coming back. Instagram's dead. Meta lost its way. And it's kind of like, okay, this stock now, Meta, is at $300 a share. If I 1 year this thing, 1 year ago, November 1st, 2022, Meta was $95. $95 1 year ago, November 1st, 2022. It was $95. All you heard was Meta was dead. It's not coming back. You can forget about this. You can forget about that. And that's the point of what I want to say is that the moment that I get, there's a lot of people that think that, particularly, maybe Kathy Woods is crazy, maybe the ARK ETF and maybe some of these growth companies, maybe they don't make the most sense. But I'll say this, in order to be where, someone like a Kathy Woods is at, in order to be where any of these billionaires that we look up to, I think you have to be a little bit crazy. And the reason why is, I mean, like think about some of the things that they're doing. Like it's not normal. Not the everyday person is going to be able to do those things. And you have to be a little bit crazy to get to that point. That's just how I feel. So I don't fall victim. One of the things that I would say is don't fall victim to what you're hearing on the media, right? One of the main drivers that we heard in 2022 is that not only was Meta dead, but that tech was dead. And so I seen someone, highlight, okay, finally, after like 14 years of bears trying to short the tech market, finally they got it right for a year. And it's like, just think about that for a second. It took 14 years for finally tech to really get nailed the way it got nailed. But then you take a look at it this year, and for the most part, you're actually seeing most of those tech companies either consolidate or actually be able to push to the upside. So what does that tell you? That tells you that there's really a belief in a lot of these particular areas of the market. One of the areas of the market that I think people should be greedy in is the crypto space. And particularly, I mean, my personal preference is just Bitcoin and Ethereum. I mean, if you get into other projects, you play those things at your own risk. But Bitcoin and Ethereum just makes sense. When you think about every 4 years, we deal with Bitcoin halving. Same way every 4 years, we deal with a presidential election. And notice that during this time when the stock market did take its dip, right, where price of some stocks and ETFs have pulled back and some outflows have happened. Notice that quietly crypto, particularly Bitcoin and Ethereum, have kind of revitalized themselves a little bit and went on a decent little run. So it's no coincidence that, once we saw, the stock market selling off a little bit, that some of that money was rotated, not all, but some of that money, you could see it plain as day that it went straight into crypto, right? Particularly Bitcoin and Ethereum. And so I think that institutions are already, once again, they're planning, right? They're planning for next year already, right? Next year's plans are already in motion, and you kind of see it particularly panning out on where they're trying to position themselves. And so, once again, we saw a really great year, I feel like, in a great comeback. The DIA we know hasn't done much this year, but we know that the QQQ and the SPY relatively had pretty decent years compared to where they were at last year. So I go once again to the point of, what's your time horizon? Don't get caught up in the noise. I think it's very easy to get caught up in, man, this is not going to pan out, or, you know, we need, this year, the certain stocks maybe not have returned the most that maybe to what you were expecting. So I'll say this to you, right? Is like, once again, we rave about companies that honestly spent a lot of time just trading sideways. So the point that I'm making is like, you can't just look and say, okay, well, this investment that I had in this particular stock, this hasn't done anything in a year, or hasn't done anything in 2 years, right? You have to think. Let's say there's some investments you make that stay the same over a course of a few years. But think about how many shares you can buy over the course of a few years. The goal, like for me, I don't just want 100 shares of a company, and then the stock goes up, 200 or 300%, and then I'm selling. That's not what I want. That's not what I want at all. I want thousands and thousands of shares, and so those things take time. I think there's been a lot of misconception, when it comes to trading and investing. I think that it's marketed to a lot of people that it's easy and you're just going to walk into this thing, right? And you're just going to be handed money and the returns are just going to come. But that's not how this works at all. Not even any little piece of it. It's not how it works at all. So, it's always, interesting, questions like this. Should we be fearful or should we be greedy? Greedy. I'll continue to say that. Greedy, greedy, greedy. And that doesn't mean go out and throw the kitchen sink at your portfolio. That means, what I'm saying is that you have to take a look and say, okay, what are some of the businesses that either A, I already know own, that I'm looking to add more into, or businesses that I'm interested in acquiring and putting in my portfolio, but I haven't yet. Like, things you should be looking at is, okay, well, what's some of their estimates for 2024 and 2025 from a revenue standpoint and an earnings perspective? Are those things expected to grow year over year? Are they expected to decline year over year? These are things you have to take into consideration once again when you're thinking about long-term investing, right? As a long-term investor, you're thinking about not just today, but you're thinking about, once again, the future. So I look at, like I said, a lot of these growth companies, and they may certain ones may have gotten their heads decapitated, but there are certain ones, like I said, that have just traded sideways and are setting up, in my opinion, for a big bull type run. So I want to see what happens with Nvidia when they report earnings. Obviously, we had Netflix that came out, and the stock price was able to jump about $60 after hours, when they reported a few weeks ago. So interesting to see that. Once again, the growth part of the market, PayPal right now is at $51. PayPal has never been this low in the past 7 years. So just think about that. It's it's taken this long for PayPal to get back to levels that hadn't been to in, almost a decade. Just let that sink in for a second. That's where the battlefield is here right now on a lot of these particular stocks and these companies. But you've seen that it's like Costco been able to stay upright. So I think that there's also a level of exhaustion. I think that investors, as well as an investor, you can become exhausted. And I think that certain parts of the market, um, once again, are not moving because there's a feeling of exhaustion, and kind of waiting to see really overall when interest rates actually end up do getting cut, right? And interest rates actually end up become, rate cuts start happening. It's kind of fitting to say because it's crazy. They originally, when they first started doing them 75-point hikes, they actually said at the end of 2023 that they would be looking to probably move and cut interest rates. But now, as time has went on, that has changed until, kind of really, I don't see them cutting interest rates until end of 2024. This is my personal opinion. But that's why I see, if anything, but how long are rates going to stay at this point, right? And how long can they for people, right? Because now you're thinking about, okay, well, you raise the interest rate, so now housing affordability, I think, is a question, that and housing affordability may be something that, in my opinion, I wouldn't say people be fearful, but I think people should be mindful of how housing affordability plays a factor into really all this. It plays a factor into disposable income. It plays a, like I said, like housing is, there's a huge housing crisis, in my opinion, that's happening here in the States, even from an affordability and qualification standpoint. Like, I think you're seeing right now the United States, there's a lot of, places that are being, like I said, that are being built, a lot of places that are being built up, in certain areas, and they want to be able to now rent these properties out as much as possible. And so I think that the banks have become more strategic and understand, hey, we have a little bit more leverage when we're talking about building properties and not allowing, making it to the point where now the banks are like, okay, well, we don't necessarily just want to be, because think about how many banks have been left on the hook for some of these mortgage payments, right, over the years. And you know there's just different ways that they're trying to be creative in how they're offering and making money, right? When you think about, in real estate, how different banks are making money via real estate, and selling, and giving people mortgages on commercial buildings or single family homes, different things like that. Those are, like I said, areas, in my opinion, that we're watching. Number one, hedge funds are buying up these houses. Correct. You see a lot of neighborhoods. You go to different places all over the country. You'll see a lot of certain neighborhoods are really being built up. And yeah, really good point there. Um, like I said, going into, once again, the future, the future. I think that cybersecurity is going to be a major player, from an industry standpoint and from just a futuristic standpoint. Cybersecurity stocks. So I would watch them the last part of this year. So I think that's where I'm pretty much like really at with it now. Looking to close the year out strong, excited. I think that, for a definite, Ethereum and Bitcoin, I think should be on everyone's, list, everyone's list. Because what's going to happen is that wave is going to come back. And so the names like Amara, Riot, a Coinbase, a MicroStrategy, like when the next Bitcoin halving happens and then Bitcoin starts to peak again and starts to prop itself up, that's when I think you'll see a lot of the bad actors really return. Right now, that particular space has been quiet. It's been quiet. You ain't really been hearing about too many scam coins pop up. So I definitely do want to make that, definitely want to do it, say that. Be mindful of, some of those scam coins this time. I think anytime something may happen, you always gain some experience for it. And I always feel like it's a good thing for me to say, because the best teacher in this is experience and time, right? And those two go hand in hand, right? Because time, and experience, they do. Like, what time, in my opinion, are you actually putting into this? Are you is this kind of just something you playing around with? Or are you really gonna get serious about it? Right? The topic of tonight is, should we be fearful, or should you get greedy at the end of 2023? I think the only people that should be fearful are people that are not serious. Because you should be fearful that, yo, if you're not serious about this, that it could, it could get wiped away in a second. And I think those that are greedy shouldn't just it's not just about, okay, should you be putting a bunch of money, or should you be buying this, should you be buying that? Nah, when I say the word, greedy, it's like, okay, how bad do you really want it? Like, cause for me, like knowing, this is 2023, I'm thinking like, yo, I'm hungry, I'm starving, right? Like I want to get to those years and I want to see, in 2025 and I want to see in 2030, 2033, 2035. I want to see like years like that. Like, where is this world really moving to? Where is it really at? Like, that's, like I said, probably the number one question that I have, but I'm willing to invest now and reap the benefits later. Like, I want to be that. I know for a fact, and I want to see everyone drop in the comments. I agree when I say this. I know for a fact that, with time, that we all will benefit from some of these growth companies, and not just growth, but companies in general, from their share prices increasing just over time as their businesses continue to grow. Right. And I know that we've sat back and we've taken a look and said, okay, well, what if you did this back then? Patience is a virtue. Patience is a virtue. Good things come to those who wait. You probably heard that line before, which is so true. We can't always just act off of what we want today, what we want to happen right now. You have to be thinking about, okay, what about the entire landscape? So going back to the question, nah, no fear at all. The reason why there's no fear is because you can, in my opinion, for me, there's no fear right now, for me at all, is because I honestly feel like I understand, what's happening here. I understand we've hit a period of a little bit of a snag where, prices are just once again trading sideways. But that is not a bad thing, because most of the companies that people rave about are names that originally, when they first started, they were trading sideways. So there was a lot of new companies that came to market over the past 5, 6 years. And so some of these companies are like babies, right? They haven't even they barely made it, into elementary school quite yet, right? Just beginning. So, do you trust like, you have to think, are you going to trust a company that's been around since the 1800s or early 1900s or mid 1900s? Or are you going to just continue to trust companies that just came to market or just, became in existence 2008, 2009? It's a serious question. Like, I would rather bet on a business that's already shown me that they can make it through recessions, right? That has been around. You think about, some of these particular companies that have been around, um, for a long, long time, a long time where record keeping wasn't even, as efficient as it is now. And I think one of the things that I would say is that being appreciative of even having the ability to have access to all of this stuff is like, yo, when you think about what our people had to do back in the day to just get the access to not just information, but ability to be able to even do what we're doing right now is truly liberating. So time is the most valuable asset. As time goes on, I believe that, people will be able to benefit from the decisions that they're making in Q4 2023. I need everyone right now to put in the comments, I'm one move away. I want everyone to put that down, because honestly, that's what it is. You are one move away. Could be maybe one trade away, right? One idea away, right? You are literally one move away and one idea, one trade away from putting yourself in a different position. Like I said, a different position. So, here, um, like I said, crowd. I'm looking at CrowdStrike, CRWD. Currently, right now, the reason why I like CrowdStrike, currently market cap of about $42 billion with a 1 year estimate of $197. The reason why I like CrowdStrike is I love what they've been able to build over there, but particularly where its price is at now. Obviously, it's not as low as it was last year, but it's came back and rallied. I think CrowdStrike will end up becoming, you know, I could see honestly, I can see CrowdStrike continuing to. I could see CrowdStrike becoming a 150, 200 billion dollar company. If they play their cards right, I don't think they'll stay just at 42 billion. So, CrowdStrike is a name that particularly, like I said, I like, and I see you guys commenting. I'm one move away. I'm one move away. That's all it is. One move away. One move away. So let's wrap a few things up here. Right. So the person, in my opinion, that should be fearful is the person that is not putting in the work. The person that's just lollygagging and just thinking that things are gonna come, that's the person that I would say should be fearful, right? Because if you haven't truly bought into this, right? I want to say something, right? You have to truly be bought into investing into the stock market if you that's what you choose to do, right? Or if you're going to do investing and trading. It's something that you have to be bought into. You can't really be half in and half out. Like you can't be kind of in and think, I'm kind of in, so it's gonna be cool. Nah, you got to really decide if you're gonna wholeheartedly be in, or if you're gonna be, if you're just trying to kind of be in, or like I think one of the things that people make mistakes is, yo, I just want to earn, I just want to earn, right? You have to learn before you earn. I think people forget that sometimes. They forget that the L comes before all the other numbers, all the other letters, excuse me, in earn, right? So you have to learn before you earn. So don't be in a rush to try to build Rome in one day. Like I said, paying attention to the different economic numbers. We're gonna have employment data that comes out tomorrow. We're gonna have all of these different um, reports for on the earnings side that is going to come out. We're going to get Apple. We're going to hear from the Fed. So tomorrow is probably going to be a pretty volatile session, right? It's going to be pretty volatile. Should you be fearful or greedy for tomorrow? No, you shouldn't be either one. I think you should just wait to see what happens and what's said. You shouldn't try to jump the gun and be greedy and try to trade, the mess out of FOMC. And you shouldn't be fearful of anything because you understand you're not playing the stock market game just for today or just for tomorrow. You're thinking about once again 5, 10, 15, 20 years down the line. So I don't think there's any issues in the market right now that people should be like, yeah, I need to be afraid. I need to be afraid. Is there some variables? Um, you know, is there some variables right now? Um, that could cause some chaos? Definitely. I know people have, been talking about what's been happening in the Middle East, particularly, and that's always something that can affect, just overall the world in general. Um, but I think that as long as uh, things stay positive on our front and our side, I think definitely we'll be okay. When I take a look at certain money that's been spent budget wise here in the United States and where it's been allocated to, a little bit disappointed for sure. We've sent a lot of money overseas for some of these foreign affairs, but there's a lot of things in the United States that definitely still do need to be taken care of. So, in my opinion, there's not enough fear, quite frankly, in the market to drag it down, to maybe last year's low. But there could be some more discounts that may be coming due to maybe some rotations, right, out of certain areas. But I think that if you're a buyer of any of these dips in these certain areas of the market, you'll benefit over time. So don't just think about the benefit today, but think about the benefit over time. I think as a long-term investor, one of the things that's what's crazy to me is like a lot of times you won't even really expect and anticipate and understand how far your investment can really go in some of these names. Like you'll look, I remember vividly watching AMD and see it be $25, $30, $35, and to see it at 100 is crazy. I remember for a while when it couldn't break 60 and couldn't break 70, right? Um, Crazy, what Tesla's been able to do. Crazy what Amazon's been able to do. Google, even Meta platforms have been able to have this, this rapid, recovery so fast. It's a true testament to what it has going on. So, that is really, my take for tonight. I see a lot of people commenting, I'm one move away. You know, Someone said Fed Powell is keeping the rate steady, right? Someone said mess around and get clapped, trading FOMC. Yeah, I would definitely say, yo, don't try to jump the gun tomorrow. Just allow things to play out and see what happens. Don't try to jump the gun. Just wait for things to come out and look to maybe do some damage afterwards. But yeah, definitely no rushing the gun and no jumping the gun. So someone said I'm ready to accumulate my one shares of T triple Q. Exactly. Anytime equity is coming down and its earnings isn't, the company is becoming more valuable. So you're able to get that discount. So don't look at, okay, if a stock went from 300 like Tesla back to 200, understand that's a significant, that's a difference, right? That's 20,000 for 100 shares versus 30,000 for 100 shares. So, um, something like I said, really to think about here in the last quarter of the year. I tell people be greedy, man. Take advantage of these opportunities because you truly never know when these stocks will take off again, right? And you don't want next year to come around and you like, man, I should have made a move, should have made a move, right? So yep, I definitely want to say, man, it has been a pleasure here tonight to be here. So as we close this thing up, I recommend that when people see these drops that, maybe coming into the market to get greedy. Don't be fearful and think that the world is gonna end, the world is gonna stop. Like really, 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 I want people to understand, these next few years, the world is changing. AI, right? You guys probably hear a bunch about AI technology, right? Um, it's changing. It's changing the landscape. It's changing the job market, artificial intelligence, right? At a fast pace. The world is changing as a whole. So how the world is right now, here in 2026, excuse me, here in 2023, is going to be different than what it looks like in 2026 and 2027. So completely different world is on the way. The world is changing super at the fastest it ever had, lightning speed. And so it's about keeping up. And yeah, being greedy is the answer for me. Only be fearful if you know you've been kind of in and out and you ain't bought all the way in yet into this thing and saying, nah, I'm really committed. I'm committed, committed. If you are not committed, committed, it's going to show in anything you do. That's in sports, that's in this. You have to have commitment and you have to have the mindset that what you're going to show up and win. That's the mindset to have. So I leave you guys with this, man. I am really excited to be here for tonight. Once again, thank you to Mark and to Jolene for allowing me to grace the stage on a Tuesday night. And let me thank you guys for even coming in. We've cracked well over 200 people. If you came in late, definitely you'll want to catch the replay of tonight's show. And I did a show yesterday, but I'm excited to be here. And you guys know I love the come up series. Anytime I'm able to come online and I'm able to be here and speak to you guys, man, I enjoy it to the fullest. I enjoy the comments. I enjoy the questions. I enjoy it to the fullest. So this is definitely a great place to be. And you guys are honestly some of the what I would honestly not just some, but you guys are the greatest supporters. I definitely want to say that. right? Thick and thin, right? You guys continue to show up every single week and just are trying to get better each and every single day. And we all are. We're all growing as individuals. We're all just trying to get better each and every single day. So, there's going to be mistakes that you make, right? When it comes to trading, there's going to be some trades that you lose on. There's going to be probably maybe some times that you feel like, man, I want to quit this thing. And you may be thinking that right now, like, you know what? I'm done. I want to quit. But let me encourage this, right? Let me encourage you for a second. I will tell you this right now. You don't want to quit. You don't want to walk away, right? I know that sometimes things can get tight. Um, and you're looking at certain things, you're like, man, it is, it's not moving right now. It's not moving. Listen, the stock market isn't going to move just because you snapped your fingers and you're telling it to move. That's not how it works. The stock market and the particular stocks you may be invested in move based upon, other variables, which we've talked about, intensely. So, don't be afraid, like Uncle Charles just said, don't be afraid of making a mistake. We all make mistakes. We all make mistakes, right? It's about, once again, he just said it perfectly. Don't quit, stay the course. Be consistent even when motivation is lacking. That's something I heard, a few months back. Um, you know, just stay consistent even when motivation is lacking. So there may be a lack of motivation that comes. That doesn't mean quit. Keep this thing going, right? Keep it going. So this was not an episode of Monday Night Tape, but this was our good brother Mark Monroe and the queen herself, Jolynn. She allowed me and he allowed me to step and grace the stage back to back. So I want you guys to drop some fires in the chat for them, because without them, this wouldn't have happened here tonight, where we've been able to impact. We have 216 people here on live. I can imagine that we'll have a few thousand people catching this replay. But what I'll say is, guys, 2 months left. Like, it's the 60-day drill. That's what you're stepping into. The 60-day drill. All hands on deck, all gas, no brakes. That's the mindset, right? We're walking into 2024. Championships. That's what we want. We want that hardware. So championships, we're putting those championships in the big cases and we're hanging those things on a wall. So appreciate you guys for tapping on here tonight. Trick or treat. And it ended up being that you guys thought you guys were going to see Jolynn and Mark. So that was the trick. And the treat was you guys got to see me tonight. So I appreciate you guys for being here tonight, back to back. Drop some fires in the chat for yourself for showing up here tonight. And I'm going to shout out a couple community members that I see here. Joseph Fisher, shout out to you. Miss Powell, Miss Audrey, Beverly T, definitely Jeremy Rushing. I've seen him firing up this chat pretty much here all night. Miss Felicia Fraser, man, this is the place you guys want to be. All week you're talking about Monday, Tuesday, Wednesday, Thursday. We have shows running here on the Come Up series on a consistent basis. And really where you're able to, get quality information over just, a bunch of, just rhetoric and things, oh, do this, do it. Nah, you guys are hearing in-depth explanations and reasons as to why, right? So what I want you guys to do on your own is I want you guys to take time to make sure you're building your own thesis. Don't just listen to something and hear something and run with it. Now, go and do the research. Go and fact check anything that you hear, no matter who says it, right? Don't just run with things and just make moves off of just something you heard. Make a move off of something you've learned, you strongly believe, like make decisions and base things off of that. So excellent episode here tonight. Give yourself another round of applause. We are going to close this show out here tonight. Once again, happy Halloween to everyone. And man, I'm excited, and I'll see you guys next week. Appreciate you guys again for gracing and allowing me to be here back to back. We had the club going up on a Tuesday, man. So, back to back and the club going up on a Tuesday. That's a beautiful thing. So, appreciate you guys very much. And I will see you guys next Monday on the next episode of Monday Night Take. Let's go.